Alright, we're going to journalize each of the following transactions, assuming a perpetual inventory system. You're not required to identify the account number in your journal entries. So here we have a chart of accounts we can use. So on January 5th, sold merchandise to a customer for $6,800. Terms were 110, net 30. Cost of sales was $4,080. So last example we did lots of we did all purchasing inventory and paying. Now we'll include some sales. So on January 5th, when you sell merchandise, it's different than selling a service. So in a perpetual system, not in a periodic system, but in a perpetual system, periodic you do your cost of goods sold at the end of the period as an adjusting entry after you count everything. Perpetual, again, after every transaction you adjust your inventory. So in this case we have a sale that we need to record, and we have the cost of goods sold we have to record. So every sale of merchandise requires two entries. So the first one will be the sale. So we sold merchandise to a customer for $6,800. Terms 110, net 30. So we offered terms. What does that tell us about how they are going to pay us? Accounts receivable for $6,800. And now we're going to use a new account that we haven't seen, sales. The difference between service revenue and sales is for inventory. Service revenue is for service. So we've done the first half. What is the second half? We have to record our cost of goods sold. So we can use our cost of goods sold. So this is a new expense. And it's for $4,080. And what are we going to credit? What did we sell?
Merchandise.
We sold our merchandise inventory. That's right. On January 7th, made a cash sale of $5,100 of merchandise to a customer today. Cost of sales was $3,060. So what is our first transaction going to be on the 7th? I'm going to debit cash for $5,100. And we're going to credit our sales. So the first transaction is to record our sale. Our second transaction is to record our cost and to adjust our merchandise. So what do we debit? Our cost of goods sold. And we adjust our merchandise inventory. On January 8th, sold merchandise for $12,400, terms 110, net 30, cost was $74.40. So what is the first half of this transaction? And how do we know it's account receivable? Yeah, we offer terms. You don't offer terms on cash, right? Because they don't have to worry about paying. So account receivable for $12,400. Or what are we going to credit? Our sales. Second half of a sale of merchandise in a perpetual system. What do we have to do in the second transaction? Yeah, we need to record our cost and adjust our merchandise inventory by the cost. So the cost here is $74.40. On the 15th, collected the amount owing from the credit customer of January 5th. So 10 days prior, we sold this inventory to this customer for $6,800. Did they pay within 10 days? Yeah, they did. So how much are they going to pay us in cash? $6,664, right? 98% of 6,800. Right, so they're going to pay us 2% less than the bill total, right? Yeah, you're right. Sorry, 1%. So 99% of this, which is 67. And what are they paying us with? Paying us with cash. We're going to leave a space here for another debit. What are we going to credit? Accounts receivable. And what is that balance going to be? $6,800. Because they owed us $6,800, now they don't owe us anything, so we have to balance it. So what do we have to debit here? We know it's going to be 68 to balance it. This is what now is our contra revenue account. So we're going to use a contra revenue account of sales discounts. So contra revenue account, where does this sit on the which statement does it sit on? Which section? So it's going to sit in the income statement below revenue, right? Underneath sales. Just like accumulated depreciation is a contra asset, it's found in the asset section of the balance sheet below its asset. This sits in the income statement below sales as a contra revenue. And as a contra revenue, if normal balance for revenue is credit, a normal balance for contra revenue is the opposite, it's a debit. customer of January 8th paid the balance owing. On January 8th, we offered 110 terms. Did they pay within 10 days? On February 4th, it's not within 10 days, so they don't get the discount. So what is the transaction going to be? Yeah, so they're paying with what? Cash? For 12,400. Oh no, sorry. It was for. Yes, it was for 12,000. 12,400. Yeah, that's right. And what do we credit? Accounts receivable.